Welcome to the Private Lenders Podcast with your hosts from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey everyone, Private Lenders Podcast here. Thank you for checking out the show. We have an announcement before we get started here, a special announcement. We have taken on our first outside sponsor ever. We've had offers to do this over the years. We are hesitant for one reason or another, but for the first time, we have partnered with Lender Software. That's LENDR software.com, created by Bryce Matheson, who's a member of Hard Money Mastermind. Really good lender, really good tech guy, and he's built a great product that is going to be making some big waves in the private lending industry. And if you go check it out, lendrsoftware.com, mention the Private Lenders Podcast, and you'll get $250 off the onboarding fee. Okay. Today we are talking about the different ways in which you can craft your private lending business to be whatever you want. We're going to go through some examples about what your end goals are, what your lifestyle goals are, what kind of team you want to run, the deal types you're into, capital source, a whole bunch of stuff that we're going to break down how you can craft this business to be exactly the right one for you.
Okay, we talk to a lot of lenders on a regular basis, locally and, throughout the country. And it's, and there's no two lenders that are identical. They don't have, the exact same goals. And I think if you're getting started or you have an active business, it's important to identify kind of who you are and what you want to grow this into, because you can grow this into something gigantic, or you might not necessarily need to. And, one of the things that we do when we talk to a lot of lenders in general is ask them, like, what is the goal? Because some people are like, oh, I want to grow this thing to be like you guys, $50 million deployed, blah, 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 blah. And I'm like, do you? Like, is that really what the goal is? Or is your goal, a financial goal, ego goal, growth goal, set, like what's the end goal? Like, of what do you want? Because, you can turn this into a very, very, very good, money-making machine and investment vehicle pretty quickly without a ton of deals and a ton of overhead if you choose to. But again, it just depends on what you want. We did a podcast last week. If you didn't watch that one or listen to one, definitely check it out. It was mortgage company versus investment vehicle, and how so many people kind of think they're building this business that ends up turning into a mortgage company when they're missing the underlying main benefit of private and hard money lending, which is an investment vehicle, deploying your own capital or deploying your friends and family's capital to make good rates of return for yourself and them, because that's really what it comes down to. So let's go through a few different options when thinking about your current operation. Like, do you want this to be an active or a passive business, right? Like, we have a good buddy of ours who had quite a bit of his own money that he wanted to deploy, and he thought he wanted to be an active lender. And he worked hard to become an active lender, and he got down to, and the goal was to be an active lender to deploy his own money responsibly. But it got to a point, he was like, wow, this is like a lot of work. Like, I got to find good deals. I got to underwrite good deals, originate good deals, underwrite good deals, service these deals. And it ended up that he just became a passive investor in other folks' loans, which is fine. He was able to get a good rate of return on those deals, and he was happy with that. It ended up that he didn't want to be an active investor. Like Chris and myself, we want to be an active investor, an active business owner. We want to be a passive investor in our own deals. So we want to personally have both of those, but one can choose which works best for them.
Yeah, that's the right place to start, really, is active versus passive. Because again, we've seen a number of examples where people think that they want to run their own deals end to end, and then they realize it's a full-time job. And they're like, oh, I already have a successful business over here. Maybe I'll just keep doing that. It's what I'm good at. It's what I do every day, what I built. And I can invest passively with other lenders and kind of have the best of both worlds. That's the best place to start. And then I think the next logical place is capital source, as I was thinking about it, because that can drive a lot of how your company is going to operate. If you're in it just to lend your own funds and you don't need to grow a giant portfolio and a huge team, great. It works that way. It absolutely works that way. If you are looking to raise capital, either in a fund or maybe in the co-lending model, that can be done as well. It's going to change the scope of your business a little bit because you're going to have more in the way of investor relations than if you're just lending your own funds. Or you could even go the credit line and institutional route, selling notes. And that's also going to be the business is going to look differently in terms of the economics of it, the team that you need, what your P&L is going to look like if that's the way you go. So I think that's probably the next logical place is, what do you want the capital to look like? Because it's going to drive a lot of other things.
Yeah, no, exactly. And, if you're a self-funded operation, like for the most part, you just do whatever deals you want to do it. But if you're bringing on investor capital, like you need to be not only safe, that's obviously a given, but like, you got to dictate what types of deals are going to always perform. You just gotta be smart about what you invest in. And, we'll tell folks in the Hard Money Mastermind group all the time, if you're bringing on new capital, like you can't do a deal that's going to miss payments and default as the investor's first deal. Even if it performs perfectly and it pays off at the end of the road, like it's got to perform exactly how the game plan was. The monthly payments have to come in. There can't be any hiccups. If not, that investor is going to get spooked and it's hard to get capital from them again. So I think after that, you really got to look at deal types. And with deal types, we always recommend doing deals that you're comfortable with. If you're in the commercial space and you're comfortable with underwriting commercial loans, do that. If you're comfortable in the residential and the fix and flip stuff, then do that. I mean, we're heavily involved in both, but like we didn't do commercial loans probably for at least the first 5 years of our business because we didn't fully know them. And it took us time to go in. So we were always investment residential, fix and flip, and bridge loans on rental properties for years and years and years. We mastered it and we learned everything we could. Every area that we were in houses on a regular basis, understanding construction, understanding ARVs, understanding kind of what the real estate investors wanted. And we did, hundreds and hundreds, maybe even 1,000 before we even dabbled with any type of other types of deals because we mastered it. And we were talking to somebody who's in our June event group. And I remember talking to him recently and like he in his particular area, like he's mastered single family properties in general. Like he, owns a ton of them, sells a ton of them, manages a ton of them, knows everybody in that market in that space. And we talked about some commercial stuff. And it's like, hey, listen, because a lot of his loan amounts are a little bit on the smaller end based on where he's at on the residential says, we're like, hey, have you ever considered messing with commercial stuff? And like, before I even finished the question, he said, absolutely not. Commercial scares the crap out of me. I don't understand it. I know they're bigger deals. I don't get it at all. I'm not messing with it. And it's like, great. So I've identified that you only want to work with investment residential stuff. Nothing wrong with that. It's just important to understand that, we talk to lenders like, oh, I could do this. I could do that. I could do this. They're all different. Like you really, really got to hone in and learn it to feel what you're comfortable with. And you know what, come to think about it, as I'm talking, there's somebody else we were just working with and all they own is commercial assets. And we said, hey, do you want to just focus on lending commercial stuff? They're like, nah, I think we want to just focus on investment, residential, fix and flip. That's where we want the lending side of the business to be, even though our ownership group only owns commercial stuff. So no right or wrong. Just figure out what you want.
Another one I would throw in there is ground up construction. For people with that background, builders and other people who have been in that industry and they feel very comfortable with those types of deals. We don't do a lot of it here and there and very conservatively, but I've definitely spoken with lenders who that's their target deal type. And they know builders who need private capital. They know how to structure it, and cool. If that's a game, run with it. And it doesn't have to be just one, just like us. Like if you want to really put in the time to learn another niche, that's absolutely available to you.
No doubt. So I would say the next thing is kind of the portfolio size. Like, how big do you want to grow this operation to be? Right. And I know we keep using stories of other lenders because I think that's a good example because like we know we're pretty clear on what we're focused on. Our 50 million portfolio has been around for a long period of time. The joke in our offices is, whenever we think we're growing the portfolio because we're doing more deals, we just get paid off from other existing loans and then the portfolio size stays the same. Right. So we've kind of identified what we like in our comfort zone and what works for us. But a lot of folks have different things. Some people have goals to get. We have lenders that we know that have $120 million deployed, and they're in it. That's where they're comfortable with. That's where they like to be. And we know other folks that have like a few $1,000,000 of their own money, personal money deployed, and they're making really good money, and they're literally making they're probably the most profitable operation. The ones who's just lending a few million of their own money, high terms, high fees, very little overhead, and they do great as well. It's just identifying where you want to be in, and you can always change that, but things differ as you grow, right? Like you start with a few $1,000,000. It doesn't have to be your own money. It can be other people's money that you're deploying, and you can do that as a one-man band. And then you get to like that $5 million mark, and we've seen this dozens of times. It's like, hey, I need some help. Typically on the keystroke side, either processing and papering loans, or on the bookkeeping and the accounting side, servicing loans and making payments and doing some accounting stuff, right? So that works up till you get that one person in place around 5 million or so. You put the right software in place, and then as soon as you get to like the 10, 12-ish, maybe a little bit higher, maybe somebody else that'll help you get to the $25 million portfolio. So, but again, like we have friends in this space that like they don't want employees and they want very little overhead. So they want to keep their operation just lean and profitable, so they can keep this as, let's call it, a lifestyle business for the most part. And they're at a place that they're comfortable with.
Yeah, I think that portfolio size definitely ties into the size of the team that you want. And like you said, some people don't want any employees at all. I think that there is a natural progression that we've seen growing in that way, where you need the first person, then you get past 10, 15 million, you need the second person. And that can carry you to 20, 25, right? And so that's maybe you and a business partner, and then two people, usually like a processor type and an accountant, and outsource like inspectors and stuff like that. And that can be a really good sweet spot, that 20, 25 million tight team. It's going to be really profitable. You're going to have a lot of work to do. It's an owner-operated business at that point in time. Like there aren't too many ways in this business, we believe, to remove the owners from the operation, but that's another podcast. We've addressed that plenty of other times. But yeah, it just depends on, like, if we're a team of 10, including us, 9 or 10, and it's a very comfortable size for us. We're not interested in being 20 people and having 100 million on the street. If we could put out another 10, 20 million with our current team, which given the right deal flow, we can, that's attractive to us. But adding a lot of bodies to the operation and to the payroll, not so appealing to us, right? So it just depends on what you're into, how you want to run it.
Yeah. So I think the last thing, and maybe we've missed some as we've been talking, but like littler ones, but like I think probably the last thing is whatever the end goal is. Like, is this just going to be a cash flow machine, a legacy building investment vehicle forever? I think that's probably where we're at, where we see this. Selling a hard money lending company, is that possible? Sure. I don't really know how that would work. It's something that frequently comes up in mastermind groups that we're involved in, hard money mastermind groups, because it's something that's, sexy to people, building, having a big equity event. And yeah, if the numbers shaked out and they made sense, I think, there's always a price that anybody would be willing to sell for. And we would too. I don't think that number would exist based on what it would be worth us selling for. But if it was there, we'd certainly be open to it. So I think that's kind of part of it, of how you want to build it. And here's the other thing, you can build this and put, I'm not saying we would do this ourselves, because we're kind of operators of the business and we enjoy it and we think that's important. But you could put, middle level management, C-level executives in place to run some of the things. I mean, we don't, and I don't see a position that we would like, but our end goal, at least until someone changes our mind, is keep this as an investment vehicle for our own personal money. If kids, family members, friends want to be involved, sure, they can be involved. And in essence, we're the capital source for deals that they're potentially bringing in.
Yeah, I recently heard Dave Ramsey on a podcast, and he used the term infinite business is how has set his up. They're not looking for any kind of sale. They're not going public. He's built this to pass it to the next generation. And I think that's an interesting idea. I mean, there's no guarantee that the next generation is going to want this company, have the skill set to run it. Like, there's definitely many examples of people doing that in the wrong way, but it's a very interesting idea. And I think that end goal and the other ones that we've talked about along the way is also about lifestyle. I think that's another important point in designing your lending company to be the lifestyle business that you want. Like we've spent a lot of time, many years full-time operating this business. And it's a manageable amount of full-time. Like we can still hit the golf course on Friday afternoon and take vacations, work remote when we want. It's a full-time job for sure, but one that we enjoy. And I know that some other people in the mastermind, for example, they've removed themselves a little bit more. Like they're still making the important decisions, lending decisions, underwriting, stuff like that, company management, but their day-to-day and what their week looks like is much more removed. And that's cool too, right? Lifestyle is a very important part of it.
Yeah, do you whatever works. I mean, that's the purpose of this episode. No two lenders are identical, right? Like figure out what works best for you and do it. And our way's not the only way. It's the way that we've kind of built this for, our conservative threshold, our liking, we built it the way that we thought was best.
All right, everyone, that is the pod for today. Like I mentioned at the beginning, if you haven't done so already, go check out lendrsoftware.com. Do a demo. Let us know what you think, and we'll see you here next time on the Private Lenders Podcast.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you would spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.